automakers yet again the target of a presidential tweet, Phil.
And, Sarah, this is getting an eye roll, not only at GM headquarters, but in the auto industry and in Detroit. Look, this tweet is primarily intended for a broader audience, not for GM, not for the business community, because everybody realizes there's very little in that tweet that is accurate or correct. General Motors is still the largest automaker in the United States. It's still one of the largest. I think it is the largest of the automakers in terms of employment in southeastern Michigan. And they didn't move their plants from the U.S. to China. They started establishing plants in China going way back to the days of Rick Wagner. I mean, he set the blueprint for the auto industry in terms of you build in that country to sell in that country. And almost everything that they sell in China is built in China. That's why those plants are there. They didn't take plants from here in the U.S. and say, well, you know what? Let's move it over to China, and then we'll bring it, some of those models back here to the U.S. That's not what happened. So I will say this, guys. While this gets an eye roll in the auto industry, and everybody will say this is not correct, I have heard from other people, just regular people, who will say to me, well, you know, the auto industry, they moved all their plants to China. And when I say to them, that's not correct, they come back and they say, really? Oh, that's what I thought. And that's not just because of President Trump. That's just a general idea that is out there.
Right. You know, Phil, it's important to point out, as you always do, China is the largest auto market in the world and probably will be for forever.
Right. Right. And right now, even this year, they've had 13 straight months, guys, of sales dropping year over year. 13 straight months. And they're still going to sell 23, 24 million vehicles. Now, think about that. That dwarfs what we're going to do here in the United States, which might be 17 million if it's a strong second half of the year.
We were just talking about performance for August as we wrap up the month, Phil. Autos, as an industry group, down 7% for the month. Auto parts down 7%. Is that a reflection of all the new tariffs and the trade friction, or are people reading into that as some sort of forward-looking indicator cyclically for the economy?
Well, autos have been out of favor for a long time, largely because I think investors look at this industry and they say, where's the growth? You're investing heavily in autonomous and electric vehicles. We're not sure that things get a whole lot better from here. I mean, look, the United States is the most lucrative auto market in the world. General Motors made a couple $2 billion in the second quarter in the United States. They're doing fantastic here. How much better is it going to get? So if you're an investor, you look at the United States auto market and you say, I'm not sure it gets a whole lot better for these guys from here. Plus, they've got to make all these investments in the future. That's why auto stocks in general are not doing anything. And in terms of the trade impact, that's the part suppliers. They do feel an impact because of Tier 2, Tier 3 subcomponent suppliers in China who then ship over parts to larger components that go into vehicles. Those are being impacted.